Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, because the latest inflation data has now been released for November. And as I've talked about recently, one of the only things that we actually get directly from the Kremlin is what's happening with inflation. So we need to look into this data to give us an understanding as to what's happening in the Russian economy. And what the latest inflation figures reveal is that in November, inflation increased to 8.9%. And that was after seeing 2 months of decrease in September and October. So the message in September and October was that everything was under control, inflation was on its way back down towards the target rate of 4%. But obviously in November, it spiked up again to 8.9%, which is more than double that target rate. And obviously one of the reasons that rising inflation is a problem is because it increases prices. Obviously that's the definition of inflation. And when prices are increasing, that means that people have less disposable income. And if we take a look at what's happening with food inflation, which is a really important metric because rising food prices impact the poorest members of society the most because they're spending a larger percentage of their budget on food. You can see that in November, food inflation has increased year on year by 9.85%, which is actually the highest increase at any point in the last 12 months. And once again here you can see that in September and October, food inflation was actually reducing. However, in November, that has reversed and we're now seeing food prices taking off again. And if you're a regular follower of the channel, you'll know that we've talked about food inflation a lot recently. I made some videos where I used butter and potatoes and onions as examples. And anyone who's hoping to see those props, you'll know that I've come in for a lot of criticism using props, and particularly this guy, the potato, which is causing a huge debate because a lot of people are saying this isn't a potato, this is actually a yam or some other family member that I'm not really familiar with. I'm not big on vegetables. It looks like a potato to me. It's good enough in terms of doing the job of representing a potato, even if it is a sweet potato in disguise or a yam or something else. It doesn't really matter. The point is, the price of these things is rising rapidly in Russia at the moment, and that is having a huge impact on the poorest members of society because when food is rising 10% year on year, that means that your income also needs to be rising by at least 10% to maintain the status quo. And this chart shows the percentage movement in real wages in Russia over the past 12 months. And the definition of real wages is that it excludes inflation. So we need to add these figures on top of inflation. And the most recent data that we have for September 24, because Russia hasn't published October or November yet, show that year on year real wages increased by 8.4%. And if we add the inflation figure of 8.6% seen in September, that means that total wages increased by 17%. So on average at the moment, wages are rising at a faster rate than inflation, which means that you can buy more potatoes with your monthly take-home. However, this is actually a problem from Russia's point of view because it's a wage spiral. As wages rise, people have more money, they can spend more money, therefore prices go up, and therefore wages go up as well because people demand to be paid more when prices are rising. And Russia needs to get on top of this, otherwise it will become a vicious circle and we will see both inflation and wages continuing to rise to the point where the economy starts to get out of control. And this is becoming a major problem for most of the companies in Russia. We've talked about this before, but Russia has now converted itself to a wartime economy. So lots of companies within Russia are being sponsored directly by the Kremlin to produce things for the war in Ukraine. And that's great for those companies because they've got guaranteed revenue. They know that as long as they produce all of the items, they're guaranteed to be paid. And so they're offering higher wages to attract in more people to be able to produce all of these items. And those higher wages are forcing up wages across the market. So companies that are not involved in the war in Ukraine are having to pay higher rates to employ more staff. And that's causing them a problem because the price of their goods isn't rising as fast as inflation. This chart shows the year-on-year movement in producer prices, which are also referred to as factory gate prices. So this is the price of items when they're leaving Russian factories. And you can see from the shape of this chart that it's the opposite of what we just looked at for inflation. In every one of the last 7 months, the annual increase in producer prices has been falling. And the latest data that we have for October 24 show that year-on-year producer prices increased by 2.7%. And that increase of 2.7% in factory gate prices compares to the current rate of inflation of 8.9%. So it's 6% lower. So basically, companies in Russia are not increasing their prices at the same rate as inflation is rising. So that means two things. Firstly, those companies are seeing a cut in their profit margin because their prices are not rising at the same rate as all of the other prices. And secondly, it means that the increase in inflation in Russia is not being driven by an increase in factory gate prices, by the increase in Russian produced things. It's actually going up as a result of all of the imports. And this relates to what's happening with the value of the ruble. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the past 6 months. And if you follow the channel, you'll know that I've been posting a lot of videos talking about the exchange rate of the ruble. And in the 3 months between the start of September and the 27th of November, we saw a deterioration in the value of the ruble. And that started to accelerate in November to the point where the value of the ruble actually fell below 115 against the US dollar. And at that stage, the Kremlin decided to step in and do something about it. And what they did was basically close down the market for the ruble. So the exchange rate that we've seen since the 27th of November doesn't really reflect a true floating rate. It represents a managed rate. And at the time of making this video, the official exchange rate was trading at around 104 rubles to $1. And that compares to the rate at the start of September of around 87 rubles to $1. So basically what that means is that any product that's being imported into Russia is costing around 20% more today than it was at the start of September. So even though the Bank of Russia is now managing the exchange rate for the ruble, the current level of 104 against $1 is significantly higher than it was 3 months ago or 6 months ago or 12 months ago. So everything that Russia is now importing is costing more in terms of rubles. So that's forcing up inflation. And as the Bank of Russia is now managing the exchange rate, that will be costing Russia money because they're having to use currency to balance off the level. So what's the summary and conclusion today? Well, I wanted to post this video because what's going on with inflation in Russia is really important. It gives us a really good feel as to what's happening in the economy. If inflation was on track, if it was sitting at 4%, which is the target rate set by the Bank of Russia, then everything could be seen as going to plan. However, the fact that it's currently 8.9%, more than double the target rate, tells us that things are not going the way that the Bank of Russia intended them to. And in November, we've seen inflation spiking up again. In September and October, it was coming down towards that 4%. It was still above 8%, so it was miles away from where the Bank of Russia wanted it to be, but it had the right trend. However, in November, we've seen it spiking back up again. And one of the reasons for that was the crash in the value of the ruble during November. I reported on it in multiple videos. We saw the value falling from 95 to 96 to 98 to 100 down to 115. And that was when the Kremlin thought, enough is enough. We're not watching the ruble crash and burn. We're going to step in and do something about it. So since that time, they've been managing the exchange rate of the ruble. The market for the ruble is actually quite small. So it's not as costly today as it would have been before the invasion of Ukraine started. However, it's still costing the Bank of Russia a lot of money to maintain that level. But even though they're doing that, they've set the rate above 100, which long-term is the worst rate that's been seen in Russia ever. So that in itself tells us that there's problems in the Russian economy because the value of your currency is linked to the strength of your economy. But also what we're seeing is that the pressure that inflation is causing issues with regards to interest rates. Over the past 17 months, the Bank of Russia has increased interest rates on 8 separate occasions, from the previous level of 7.5% to the current rate of 21%. That is an absolutely huge increase, almost 3 times. And the Bank of Russia is meeting again on the 20th of December to decide whether or not it's going to increase rates. And the latest data for inflation, which has jumped back up again to 8.9%, indicates that they might actually increase rates further. They could raise them above 21%. And I recently talked about this in a video. The problem that you have when rates are at that level is that nobody wants to borrow any money. Mortgage rates at the moment in Russia are sitting at around 28%. Now, previously, there were a lot of subsidised mortgages. The state was actually sponsoring people to take on low-cost mortgages, and those low-cost mortgages were coming in at around 8%. However, Russia decided to scrap that system in July, so you can't get a subsidised mortgage anymore. So if you have to go to the market, you're going to have to pay 28% currently, but if interest rates are increased again, then obviously that could go up above 30%. And what that means is that nobody wants to take on a mortgage to buy a house. Nobody in their right mind wants to pay 28% interest every single year, because property prices aren't increasing at that sort of rate, and it would cost you a fortune, and potentially you'd be in negative equity relatively quickly. So what we're likely to see is the property market starting to crash in Russia. House prices might start falling. People might be forced to start selling their houses because they're in negative equity, and that could create a vicious circle in the wrong direction where you see property prices collapsing in Russia. But also from a company perspective, it's not the right time to start borrowing to invest into your business, because you're going to have to pay somewhere between 25 and 30% interest on that money. And that wouldn't make any economic sense, because your return on investment for making that investment would need to be 35, 40, 50%. And that is a very ambitious target for any company. So the current level of interest rates is discouraging companies and individuals from taking on more debt, and that is going to cause a contraction in the economy. And what we're seeing at the moment is that the level of retail spending in Russia is starting to slow down. People are not spending as much. They're concerned about what's happening. And also, when interest rates are sitting at 21%, you can put your money in the bank and earn a very healthy return by getting paid 20% interest. So all of this is discouraging spending and investment in the Russian economy. It's likely to reduce the output from Russia's perspective. And all of that is going to put further pressure on the economy at a time when inflation is being forced up by what's happening with regards to the value of the ruble. So we've got a really difficult situation for the Bank of Russia to try to sort out here. So the overall summary of today's video is that the latest inflation data shows us that inflation is now on the rise again in Russia. That's bad news for the Russian economy, because the Bank of Russia is likely to increase interest rates to try to counter it. Interest rates are already sitting at eye-watering levels, meaning that nobody wants to borrow any money. And if they go up further, then the situation is likely to get worse. And all of this tells us that there are serious problems in the Russian economy right now. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.